Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 20th of September. Now, as we come into Thursday's trading, have a look at the currency pairs once again. No significant change here on Euro, to start with that one. The Aussie, okay, and Kiwi continue to sort of, well, they've been moving around with $1, but basically the market is sort of brushing off the whole US-China trade tension. They don't seem to think it's real or anything tangible. And you can see dollar yen, I mean, it is starting to trade sideways again, but all in all, on a short-term basis, it's going up. And that's primarily because the tension between the US and China, even though there's been a little bit of tit-for-tat sort of tariff applications, doesn't seem to escalate. Dollar CAD just drifting lower. It seems like oil's in the driving box once again, 71.37 for oil, driving dollar CAD lower. Now, the dollar CAD is still overshadowed by NAFTA, right? And they are working towards some sort of deal. I haven't read anything where it's actually coming together. Freelander, who's working on the Canadian side of things, seems to think everything's going along nice, but they're just going to keep going along. So we'll wait and see what happens there. But fundamentally, the Bank of Canada is hawkish. Technicals point down, so it's probably heading lower. Now, this is the one I wanted to get to and why I left it till last. It's sterling, right? Now, this pair here, I mean, it has been in a very good bullish mode of late. What we did see yesterday, and this is one of those things where, and I wanted to go through the whole aspects of this, is we saw really strong UK CPI numbers. Okay, sterling was trading around 131.60. It's sort of been topping out here for some time. UK inflation has gone through the roof, suggesting to me they need to start thinking about raising rates as soon as possible. We saw it jump up to 132.15. To me, this was heading towards 133.5. I mean, it's such a big move. And then what we had was, you know, you don't fall in love with your positions. Boom. UK, there was a report in the UK Times that UK PM Theresa May had rejected the latest Brexit deal or setup, and the damn thing dropped 120 points. Okay, this completely schmozzled the whole market because fundamentally, technically, central bank-wise, everything suggests sterling goes higher, and the geopolitical event has butchered the damn thing. Now, let me just come across, before I get into just going through a full assessment there of the sterling, because there's a really good few lessons we can learn out of that, is just have a look at what the US dollar is doing. Now, don't get overshadowed by the short-term news. Now, this is the US dollar index. It has, probably since August, right? You look at August, you come across, it's been pretty much trading sideways, somewhere between 95.70 and sort of 94.30-ish around there of late. I mean, it is drifting lower, but overall, there's been no major change. Fundamentally, the US dollar is strong. They are going to be raising rates. This is all geopolitical tension and, you know, reactions on euro, that positive move on sterling. Don't forget, euro and sterling are a massive component of the US dollar basket. Okay, well, euro 58% or 57.8%, and sterling about 12 or 13%. So if they go up, US dollar index does tread lower. But if you have a little look on the back on the majors, I mean, it's not really doing a hell of a lot. If you ask me, it's well, it's very mixed. Okay, the US dollar is going down against dollar CAD. It's going up against the yen. It's falling slowly against the Aussie and Kiwi, sideways against the euro, and it has been going down against sterling. So the US dollar, it's all over the shop. And this is what you get with those geopolitical events. So just coming back to the two major things that are really, well, or the major thing, I should say, which is messing with things, it's dollar one, right? Now, this is the big news item story that everyone's sort of flogging at the moment. Now, it is tangible. Trump has put a lot of tariffs on China in the import of Chinese goods into the US. Now, this is creating big moves, short-term moves, and it's hard to sort of see what's going on behind the scenes. It's almost like trading stocks, okay, equities, like individual company equities, where you don't know what is happening behind the scenes, and you see these gyrations of madness. It's a bit crypto for my liking. So what we can do is actually just keep a track of what's going on. If you have a look at the yuan, I mean, it trades in a pretty big range, but even over the last month or so, it's been trading in a 600 or 700 point range. Now, 100 points on the one is, to me, it's more like 20 or 30 points on a major currency pair because the spreads are a bit wider, it moves a bit crazier. So just be aware this thing is creating a bit of a menace and it is disrupting the natural flow of the other major currencies. Right? That's what we are seeing out of this. It doesn't mean we don't look at it and potentially trade it, but just be aware that's what's happening. Now let's have a look at the equity markets. Okay, US equities slightly up. Once again, yesterday, Chinese equities, up above 1%. I mean, what aren't I seeing here? There's tariffs being put all over the place on Chinese goods. I don't see what's going on. So there's something happening behind the scenes that isn't exactly clear to me just yet. But I see things escalating. And maybe I'm just blindsided by all the crap I'm reading. Anyway, we'll see what happens there. The Nikkei due to open up 40 points up, so just keep an eye on that. And then now let's just have a look in here. I want to give you a bit more detail around sterling and what was going on there. Now, if I just scroll up here, I mean, these CPI numbers were already high last month. They were expecting a slight pullback to 2.4%. Now, 2.7%. Now, if inflation's above 2% and they don't raise rates, the governor of the central bank has to go to Parliament and explain what the hell he's doing. Now, 2 months in a row, 2.5% last month, 2.7% year-on-year inflation this month. I mean, this thing's boiling over. So regardless of what is happening with Brexit, and they can use that as much as they like, if they don't do anything and Brexit just continues as it is or it becomes a good outcome, inflation could be well over 3%, and they'll have to start raising interest rates super aggressively. So to me, sterling is a massive buy at this point. And that's where you can get caught up in the whole euphoria of what's going on. So just looking at, just coming back over here to the daily analysis summary, right? The detailed summary here. Now, if I go down to the daily analysis snapshot, just to give you an idea where all this is coming from. So at the moment on the snapshot, you can see here bullish. But that doesn't really tell you all the details. So the members who do have access to the back end will be able to see what's going on here. So central bank, hawkish, they're already saying interest rates need to go up, inflation's too high. This little shot in the arm that we've got from these recent inflation numbers really push the economic data on the top side. Technically, it's going up as well, and you've got a very bullish sentiment. Now, if I just sort of drill down through the components here, you can see the central bank was hawkish. Inflation's well above their target inflation rate. The data is coming in stronger, and on the time frames, okay, pretty much on all time frames, sterling is going up. So the sentiment is topside. Now with that, and this is where the trading opportunities come up, and I mentioned yesterday, UK inflation on the next best trades is definitely a really hot trading opportunity. If the inflation numbers come in strong, all the ducks line up, this thing should go through the roof. Now what did we see? We saw sterling, the UK data, right? And what we were looking for was a number above 2.6%. And that was probably a little bit of a stretch. We got 2.7%. Now, sterling was trading around 131.65 at the time. I tried to get some as soon as I could. I ended up getting them in the 90s straight away, and I bought some more above the figure. Now, that was a really good clean out. And this is the daily chart that I had posted yesterday. There's nothing really to stop sterling except a few other measly sort of highs along the way here. Okay, you got a few highs, and they can create some sort of fictitious levels. But overall, this thing was headed to the top side. Now, the opportunity is pretty much, you could get in two ways into this opportunity. Now, trying to trade live is definitely, if you've got a live news service, then definitely do that. That's where I got them in the 90s. It was actually around 97, I think it was. So I didn't actually get much better than where my technical setup was as well. And there's the how to trade the opportunity. These are the details of where I got in. What happened ended up being a loss. Now, this is one of those opportunities where you can come back and reassess the whole opportunity itself and think, well, what did I do wrong? Well, when you look at the trade, you did nothing wrong. Well, like me, I look at this and go, if these numbers came out the exact same way again, I would definitely do exactly the same again. Like, this is a buying situation, and you've got to work out where if you made a mistake with your entry or the data wasn't right, or et cetera, everything, all the ducks lined up here. But what it was is, if you read the dialogue down on the trade result here, the numbers came out perfect. Everything was in place, and then a massive geopolitical issue reared its ugly head. Right? There was a report in the UK Times saying that Theresa May, the Northern Ireland border issue was going to be too much, and the whole deal was getting thrown out the window, et cetera, et cetera. So basically, sterling plummeted 150 points. Right? Completely insane. If I just give you a look at this chart, you look at I looked at the price action when I woke up this morning, and I looked at where sterling was. I was just shaking my head, going, "What the bloody hell has happened here?" I knew it would be something to do with Brexit, and sure as hell it was. 132 sort of 15-ish, all the way down to 131 sort of in the 90s. It was a 120-point move to the downside after probably the strongest inflation numbers in the last 5, 6, 7 years, right? So then you've got, so now sterling is back to where it is. To me, this thing is still going up. And if anything, all I'm doing is adjusting the support level now to that crap geopolitical event has now given us a new support line, but I'm still looking to buy sterling as we go. And if I just come back over here to show you the actual news, I mean, this is where, as I was saying in the trade zone there, if you're not pissed off with geopolitical events so far, you sure as hell should be, because this trading opportunity is serious cash. You know, you've got, as I said, all the ducks lining up. One thing we can't factor in is random events like this. Now, this is the UK Times, and this is the power of the media and fresh reports. UK Times reported that British PM Theresa May had rejected an improved offer from the European Union to solve the Irish border. So that just throws everything into a short-term hysteria, and the whole situation is extremely negative. Brexit could blow up, blah, blah, blah. It's all storm in a teacup stuff, but it was enough to flush out all the longs. And the move down, 120-point move down, was so big because it was clearly obvious you had to be long sterling. So if you got beaten up on sterling yesterday, you weren't the only one. And actually, you know what? You did the right thing. Because if you don't buy when those numbers line up and the technicals line up like that on a situation like that, then you're going to miss a lot of opportunities, because this is where the cash is. And this, unfortunately, is where, it's a good example, this is why I wanted to explain it, where the geopolitical issues can really screw the general flow of everything up. Okay, so what you can do here is adjust your potential opportunities. You can, for example, break your trade size up, have 2 trades looking to get, some traction with, have one position that makes you cash and you're sort of scalping it around a bit. The other position is a core long position, so you can actually take advantage of, the continued move higher, which should happen. And make sure you do, if you do have positions on, make sure you have a trailing stop set up, okay? Because last thing you want to do is come out of an event like this. And I tucked away some cash on the initial move with a much larger trade size. And that gave me the room to just have a core position and let it run. Now, I had a stop just under 80, so I was out here, and I never thought for a minute I would actually get hit. But the whole opportunity for me ended up being like a no profit situation or a small win, when it should have been actually, like a really like 5 to 7% winner. So basically what you're going to do is just with these geopolitical events around, make sure you are running trailing stops pretty tight. And a situation like this, it's a good example of, if it does break down where it was before the release, and that was pretty much around 65, 70, then that's a big negative. You don't want to be sort of getting long if something happens, because we know in the background, this is going to go up. The only one thing that's going to drive it lower is Brexit. And that's what happens. So you don't want to be buying if something happens. I know a lot of traders were also did the right thing. If you didn't see the news, well, then the right thing to be doing was buying sterling up around 130, 150. A lot of people just got churned in there and flushed straight out. So that was just unlucky as well. Once again, it comes down to that random news around Brexit. And you know what? Half of this move the last week or so has been all positive Brexit news. So what's the chance of, how unlucky is it that negative Brexit news comes out straight after the strongest inflation numbers in the recent time. So it's just unlucky. And so don't get dejected. You can get pissed off, okay, with Brexit. That's what I do. Don't get pissed off with yourself. This is the situation, right? Make sure your trade plan and your capital management is correct, and you don't get caught up on, over trading these events, right? So we come back to looking at the market again. This is what you should be doing each day as well. Reboot. Have a look at your trades you had yesterday, whether you made money or lost money, and then look at the opportunities that are in front of you. So when I look at the opportunities today, geopolitical events definitely overshadowing things. We've got Brexit, we've got NAFTA, and we've got the US-China trade issues, right? So there's a few other small ones, but those three are dominating the big pairs. Now, you look at the upcoming events today. Now, you want to focus on these. Now, Kiwi GDP numbers. Now, the Kiwi has been slowly climbing on a technical basis. It's slowly edging up on the hourlies, but on the dailies and weeklies, it's still going down. In fact, it's right on the edge, on the cusp here of a potential move. Now, the Kiwi economy, to me, is in all sorts of trouble. But if you have a look at the technicals here, and I come over to the Kiwi here on a couple of different time frames, you'll see that it's sitting a little bit precarious. I mean, overall, this doesn't give you a good picture. I've just sort of blown it up so I know exactly what's going on in the hourly perspective. It's going down, starting to trade sideways through the trend line. Okay, it's not exactly really shooting the lights out of it. The daily chart, we are pretty much right at the cusp here, the crossroad of a bit of a move. So if we get strong GDP numbers, we may see a short-term blip up. But on the weeklies, you can see how aggressive this thing's, and the monthlies, it's going down. The Kiwi economy is crap. So we may get one random positive number here, and we may see a short-term little blip up here on Kiwi, but I think it's short-term. Overall, when you do look at the Kiwi technicals, it's going down, right? It's the central bank has already mentioned business activity, which, funnily enough, comes out next week, will be the deciding factor for them to cut rates. If we get another weak number next week, well, they will be cutting rates. So today, focus on the Kiwi GDP for Asia. It's probably the big release. We've got the Swiss LIBOR rate. Now, this is once every 3 months. I don't expect any changes, and the Swiss has just gone into a bit of a sideways movement with the recent activity there. Now, UK retail sales, a hell of a time for retail sales to be coming up straight after the inflation numbers, but the market has just been bashed up on this Brexit news. So traders will be cautious, but once again, if this is strong, well, sterling should go up. But then you'll find that less traders will get involved in sterling because of that random Brexit news. If anything, to me, I'll be having a look at it for sure, but reducing my trade size. I don't want to get beaten twice on really strong fundamentals and then Brexit turns around and gets me again. So that's where I'm at. Now, there has been a bit of a shift here in some of the analysis. Dollar CAD has gone into a bearish mode. I've still got Aussie sideways, Kiwi bearish, bullish for sterling. And dollar Swiss is swung back into a bit of a sideways. The daily chart there on Swissy has gone, it's just sort of breaking down, and it's whips back up into the range. So it's a little bit confusing. But the bigger pairs, or the bigger currencies, euro, US dollar, dollar yen, pretty much just sideways at the moment. So that's where we are, guys. It's been one of those little bit of a spiteful episode there with the UK CPI numbers, but brush that off. I'll try and get this up. We've only got 9 minutes before these Kiwi GDP numbers. It is a big focus for Asia. And then we're back into this sterling once again. All right, guys, that's it from me. The majors are there waiting for us. So let's tune in and see if we can make some dollars out of this. If anything, with all these geopolitical events, the trading opportunities are probably shorter term, 2, 3, 4 hours, if that, and then keep an eye on things. And if you're trading this Kiwi GDP numbers, keep an eye on dollar yuan. It is the beast in the room at the moment. All right, guys, have a good trade day. I'll see you in the trade zone. Cheerio.